Welcome to the Ideal Investor Show. Challenge your mindset and discover where you are. Let's go. Today, I'd like to talk to you about, you could almost call it an obsession. And what we use, so it's not quite so aggressive, is how to invest without losing yourself. And what do I mean by that? There is a little bit of risk. In the one way, when it comes to investing, I would say it's a risk that is somewhat similar to an addiction. And then there is another one that oftentimes is called FOMO, fear of missing out. And then there's a third one, in a sense, that I would say has to do with disappointment in oneself. And the thing about it is that I believe you can stay away from all of them, all three of them, or cure yourself of them if you detect after you listen to our show today that you might be addicted in that way, by really finding and making sure and committing to investing compared to what I believe the cause of these kinds of addictions is, and that is speculating. Now, how do we actually get there? Let's say you look into investing, especially investing in the stock market. And when you do that, you see that there are a number of different so-called experts or gurus who basically show that you can make massive gains in the stock market by being able to see how the markets are reacting to certain announcements and to certain trend lines and to certain investments and so forth and so forth. What does that mean? So, for example, you can buy certain stocks all over the world. There's a German stock exchange, a French stock exchange, a Japanese stock exchange, a Hong Kong stock exchange, the United States exchanges, which are like the Dow Jones and the New York Stock Exchange and so forth. So these different exchanges all list a lot of the biggest well-known companies' stocks. And let's just say we have stock A, and it's an internationally traded stock. So it's at all these different exchanges. And you can buy the stock, let's say, in the morning in Germany, at the European time in the morning in Germany, for $100, or 100 euros, I should say. So you buy 10 stocks. And you buy them because you have heard that there will be an announcement by the US government that day, that trading day, that everybody expects to be very positive for the company whose stock you bought. Right? Let's say, for example, the announcement would be that the products that that particular company is making or the services will be in massive demand, let's say in the United States. Now, you don't know for sure, but you're buying the stock for 100 euros because you are assuming if this announcement is made as it was promised, and if the content of that announcement is exactly what everybody expects, then the share price is going to go up. So now you have basically these 100 shares, these shares for $100 a share, and the announcement comes, and it goes exactly the way you expected, and the share price jumps up by 15%. So depending on exactly when the announcement is made, if it is made early Eastern time, keeping in mind that there's a 6-hour difference. So if you bought the shares in Germany at 9 a.m. in the morning, and the announcement is made at 9 a.m. in the morning Eastern time, then that's at 3 p.m. German time. And in Germany, the stock market is closing at around 4 p.m., just the same like in New York. So there's one more hour that announcement was made by the government. The stock jumps all over the world by 10 or 15%. You can sell the stock that jumped because it jumps in Germany, it jumps in Hong Kong, it jumps everywhere, including in the US. And in one day, you made 15%. Now, let's say, same situation, the announcement is made, but now the situation is the announcement is not that the government is going to buy from the company that you just invested in, but that it found another company inside the United States, so it doesn't need to buy from this German company, and therefore the security is increased for the United States by buying the product domestically. Well, so everybody had anticipated that the German company will have a huge win, and it didn't come. It wouldn't be very unusual if the stock price goes down by 10%. And this is where this whole thing about losing yourself can come in. So you anticipated to make a huge win, but the announcement went in the wrong direction, and now you lost 10%. Now, for the next day, you obviously want to regain those 10% and hopefully make some gains. So now you're frantically looking for something that is hopefully going to work out. And the next day, maybe you break even. And the next day, you have a down day again. And the next day, the president in the US is announcing tariffs and everything goes down. And so this chasing a certain short-term goal is very, very similar to going to the casino and putting your money on red or black or a particular number in roulette or any of the other casino games. Because it is unpredictable and it's not really investing, it's speculating. Or you could call it betting. It's very similar to that. And if you ask anybody who knows anything about speculating and betting, there are many, many, many cases that show how addictive it can be. So what we really want is not lose ourselves in chasing a certain number, chasing a certain performance, constantly being in there looking for the slightest little piece of news that could move a particular stock we own up or down. And the same, by the way, is true not just for stocks. It's with the gold price that goes up and down internationally. It's the same with Bitcoin that goes up and down internationally. And guess what? It's even the same with real estate, right? You have a situation where you actually consider buying a property and maybe bought a property. And at the time when you bought it, somebody mentioned that there is rumors that Amazon and a couple of other companies will build huge delivery centers, which will attract a lot of new jobs and a lot of new people, and your property will go up in value rapidly. Well, if Amazon decides the economy is not going as well as they anticipated and they delay building that distribution center, then it's not going to go up rapidly. But it's going to do what it's always going to do for a good company, a good property, a good asset. It will perform properly in accordance to the asset value. So investing is way, way, way more related to being convinced that what you invested in will perform to the medium. So sometimes it's up, sometimes it's down, but it has a certain performance. A good measure, by the way, in real estate is that the long-term pure price increase in most residential real estate is about 4% per year. Yes, I know there were years when it was 10% per year. There were even years around 2008 and 9 where it went down a little bit. But long-term, 20, 30, 50 years, it's about 4%. With the stock market, it's long-term about 7.5 to 8% with the S&P 500. Now, when you're listening to me and me saying this, you might say, well, why wouldn't I then invest in the stock market long-term rather than in real estate? Well, in real estate, you have obviously a bunch of other income sources, right? Unless you buy dividend stocks, you don't get really any rent. So, and dividend stocks don't go up in value as much. So in real estate, you have the appreciation in value, but on top of it, you have rental income. And on top of it, you also have the depreciation, meaning like the tax benefit. right? And the other thing that you also don't get in the stock market is in your real estate, you only need to put 20% down and 80% comes from the bank and other people pay for it. You cannot buy stock where you put 20% down and other people give you the other 80% to buy the stock. So there are a bunch of different benefits why I'm always saying it should be 65% real estate and only about 10% stocks. But the point is that investing means long term. Everything that you do on a day-to-day basis, weekly, monthly, is speculating. Like in the casino. And you know, and this is a truth that has been true for decades, if not centuries, in the end, the casino always wins. So don't play the casino game, do investments, find the properties, find the companies, find the assets that you really like and believe in, accumulate them, buy some on a regular basis, and you will become wealthy, no doubt about it. So that's it for today. Be well and stay safe, and I talk to you soon.